I'm Emily Chang in Los Angeles, and this is Bloomberg Technology. Coming up in the next hour, fanging by a thread, why the threat of antitrust regulation has Silicon Valley and tech investors on edge. Plus, rating Uber. After a rocky post-IPO performance, Uber's underwriters are out defending the stock with bullish calls, but a big tax investigation is looming. And Chinese citizens continue to push back on censorship 30 years after Tiananmen Square. Just how high can the Great Firewall in China really go? But first, to our top story, the U.S. government is increasing its scrutiny of big tech companies. On top of the Department of Justice and Federal Trade Commission dividing oversight for possible probes into Google, Facebook, Apple, and Amazon, the House Judiciary Committee has joined the fray, announcing that it would spearhead its own investigation into possible antitrust practices. House lawmakers plan to hold hearings on the matter, a move endorsed by House Majority Leader Nancy Pelosi, who tweeted this warning to tech companies, quote, unwarranted, concentrated economic power in the hands of a few is dangerous to democracy, especially when digital platforms control content. The era of self-regulation is over. Joining me to discuss Bloomberg Tech's Garrett DeVink in New York, who covers Alphabet and big tech for us. So, Garrett, what is the very latest in terms of the developments today in all of these potential or actual investigations?
Right. So the only sort of publicly confirmed new investigation is the one you mentioned that's coming out of Congress. In terms of what the DOJ and FTC are doing, those government agencies haven't even confirmed the reporting that we and others have put out there, that they've sort of divvied up the four biggest tech companies and are preparing, their own antitrust investigations. The companies have not confirmed it either. We've reported that the companies have reached out, that they're trying to figure out what's going on. I've reported that Google's a little bit in the dark, especially over the weekend, about exactly what's going on. And so at this point, we should probably be careful and not necessarily say this is the new, big Microsoft antitrust case or the new big AT&T antitrust case, but it does feel different. And just the way that, the conversation is coming around this. If you look back at the last year, the last 2 years, everything has been building. Politicians on both sides of the aisle are talking about antitrust. And it's just obvious at this point that these agencies want to do something about it, but we're not sure what it's going to look like.
Right, and certain sources that I've spoken to, legal sources who understand how these things work, certainly say it's more likely that these agencies could take a look at these companies, given that they've divided oversight, certainly than if they didn't talk about how they would share these responsibilities. But do we have a sense of how much more serious, really, these potential investigations or potential actions could be today, now, 24 hours into this?
Yeah, I mean, I think dividing them up obviously is a sign that this is real, right? I mean, there have been, over the last few months, reports of meetings, of conversations, of lawmakers asking agencies to jump into this. But it shows that, those requests have been heard, and that, these organizations are, getting the gears turning towards these tech companies. And so the question kind of comes down to, okay, how are the tech companies responding? And, they're also in a bit of a wait and see because, like I said, they don't quite know what to expect yet.
Let's talk about Alphabet more specifically, because Alphabet has certainly been the target of various investigations in Europe. They've paid huge fines, I believe 3 huge fines. So there's been some speculation that Alphabet could be the most vulnerable here, given what we've already seen in the EU. Is that the case in the United States? Yeah, I mean,
I would hesitate to say that Alphabet is the most vulnerable out of all of them. I mean, when you look at sort of some of the public rancor, I would say Facebook has gotten, is borne the brunt of some of the attention of both politicians, advocates, and, just consumers. But it's true that Alphabet has had to pay, upwards of 8 billion euros in fine. That's, nearly 9-10 billion US dollars in fines over the last few years. But they've also kind of honed their playbook at pushing back against these things. And the big question here is, you had that Nancy Pelosi quote that was talking about these companies being big and their economic power being dangerous in and of itself. And so the last 20, 30, 40 years in the U.S., that hasn't really been an issue. Regulators haven't been concerned with size. They've been concerned with prices for consumers and consumer welfare. And from these companies' perspectives, they've helped consumers. They've helped bring down prices for services, things like Google Search, Gmail, we all use all the time. They're free. in terms of products, they're great. And so we, of course, pay with our data. But the question of consumer price is sort of up in the air. And so what we're really curious about is, has the U.S. kind of legal system, government system, changed the way it's thinking about antitrust to just go after these companies for their size rather than their effect on the end consumer?
Meantime, Google also has an app store. They've got the most popular mobile operating system, the Android operating system, which the majority of smartphone users use. That said, today we also saw developers sue Apple for antitrust, and Apple is under the microscope, potentially, from the DOJ, but also Senator Elizabeth Warren has called out the App Store and whether or not that model is anti-competitive. Tim Cook, the CEO of Apple, pushed back on that today with CBS, saying we're not a monopoly. In fact, Apple only has 30% of smartphone market share. What is the difference between the Apple App Store and the Google Play Store?
I mean, in some ways they're similar. They face the same challenges. They charge that same 30% fee to anyone who wants to sell anything on their marketplace. And because they are the two main app stores, at least in the United States and other Western countries, there's a lot more when you go to China, and that's a whole other story. But in the U.S. at least, I mean, they obviously are the essentially only ways to download apps. There's some more kind of complicated ways to do it, but most people download their apps through the app stores. And if you want to sell on those app stores, you have to pay that 30% fee. And I think a lot of outside observers, analysts, the like, have said that 30% fee is likely going to come down just because it's very difficult to keep charging that and justifying it.
Right. All right. We're going to continue to follow these stories. Bloomberg's Garrett DeFink will have more on this later in the show. Thank you so much. All right, Salesforce gave a quarterly revenue forecast that topped Wall Street estimates, signaling that the market leader in customer relations software will continue to see rapid growth. Co-CEOs Mark Benioff and Keith Block have chased new markets to reach an annual revenue goal of $26 to $28 billion by 2023. Salesforce has also continued to expand by hiring more workers in offices around the world to sell its growing product suite for cloud-based sales tracking, customer support productivity, and data integration. Coming up, Uber's had a rough start as a public company, but the CEO of the private equity firm General Atlantic thinks it's still a critical milestone. What Bill Ford has to say about the company's transition from private to public, next. This is Bloomberg. While some would consider Uber's IPO to be sort of a disappointment, Bill Ford, CEO of the private equity firm General Atlantic, says it wasn't, despite the plunge in shares. On Tuesday, Ford spoke exclusively with our own Eric Schatzker at the Bloomberg Invest New York conference.
I think the lesson is, or what's happening, is that more of the growth of these companies is happening in the private market than in the public market. So Uber, if you step back for a minute and talk about a $60 billion plus valuation, what an incredible accomplishment. But so much of that happened in the private market. If we go back to the days of Microsoft going public in the mid-'80s, 99% of their value creation happened as a public company, not as a private company. And so that's a big shift. I think it's a reason why many institutional investors and even retail investors have said, I've got to get exposure to private markets if I want to participate in the most interesting innovations and with the most innovating entrepreneurs.
So General Atlantic was an Uber investor dating back to 2015.
Yep.
And you enjoyed some of that appreciation
Yep.
while the company was private. Do you look at the IPO and call it a disappointment?
I don't. I talk about it as a milestone in the company's development. They still have to work their way into their business model towards profitability. I think they talked a lot about that on their earnings call. So I don't see it as the end of the road. I see it as an important milestone. I think it was an achievement in terms of making that company available to public investors, but I think it's got a long way to go.
If you could re-edit the Uber movie thus far, how would it look different?
The only thing I would have probably done differently is maybe push the governance transition and the move to a professional CEO like Dara a little bit earlier. I think some of the challenges that they're dealing with today, or they've dealt with over the last year, would have been dealt with a year or two earlier. But beyond that, I think they've done a great job.
So you raise an interesting point about an IPO for a company like Uber being a milestone. But at the same time, we've acknowledged that, at least under the current construct, so much more value, if you will, is created while the company is private. What future does that leave for the public market? I mean, it raises some existential questions about the purpose of the public market and why anybody would want to participate there. And if you had a choice, why you'd want to be in the public market when you could be in the private market.
Yeah. I mean, if we go back, when I started in the business about over 25 years ago, the public market was a critical source of capital for company development because the venture capital market was quite small, the growth equity market was even smaller, and the buyout business was just getting going. And so capital formation had to happen in the public markets if you wanted to fuel your growth into the future. Now, as we talked about earlier, it's happening, capital is widely available in the private markets. And what CEOs are realizing is that they can accomplish a lot more as a private company and forestall the distraction of quarterly earnings, meeting with investors, that 10 to 20% of management time that gets taken away to manage being a public company. So that's a shift, and I think that there's some positives to it, and there's negatives.
That was Bill Ford, CEO of General Atlantic, with Eric Schatzker. Sticking with Uber, in the wake of Washington's antitrust scrutiny of the tech sector, we've learned about yet another investigation. The Internal Revenue Service is now examining the ride-sharing company's taxes for 2013 and 2014, along with various state and foreign tax authorities. This, according to a company filing. We're joined now by Bloomberg Tech's Eric Newcomer, who, of course, covers Uber. So, Eric, how serious is this investigation?
I think it shows that regulators and investigators have looked at every piece of Uber. The IRS looking in behavior in 2013, 2014. I mean, it's sort of hard to know how serious it is. Uber has a very sort of interesting financial situation. It lost $10 billion in operating losses over the last 3 years. So this is a money-losing company that was sort of very new and had to figure out how to do its accounting. So we'll just have to see over time what the IRS finds, but it just speaks to sort of the broader array of government inquiries that this company has faced that we don't know definitively where they netted out, if they did.
Does this mean they could eventually pay more taxes in certain jurisdictions, or that they could end up with a huge fine? I
mean, there are lots of questions about Uber's taxes. A lot of it is the carry forward, right? I mean, they're losing so much money now, and the hope is, the day they turn a profit, they can use some of these losses to mitigate those future taxes. So a lot of the questions, if you're reading through the S1, are around those carry forwards. And they set up, their taxes in the Netherlands, trying to avoid some taxes, and then the rules have changed. So it's just a constantly shifting ground for Uber. And I think the question here is just, with the profits so far away, knowing where its tax situation nets out when it finally does turn a profit is just filled lots of uncertainty.
Meantime, we heard the CEO of General Atlantic there, who also happens to be an Uber investor, talking positively, optimistically about Uber. But we did have some analysts coming out today rating the company as a buy. Meantime, Lyft shares have slid because some of these analysts are signaling a preference for Uber over Lyft. Talk to us about the dynamics here.
Yeah, I think it's hard to read too much into it. I think, there was so much excitement ahead of the IPO. I think there are a lot of people who still buy into the story that we were talking about before Uber struggled on the public markets. And I think, the banks, many of them that worked with Uber on its IPO, are now coming out and giving it a buy rating. And I mean, obviously there's sort of a lot of thought that goes into that, but figuring out the Uber investment is just this huge trade-off between buying into sort of the belief that the transportation industry is going to change overall versus sort of a closer analysis of the losses. And that's a big bet to make.
All right, Bloomberg Tech's Eric Newcomer, who covers both Uber and Lyft for us. Eric, as always, thanks for stopping by.
Thank you.
Coming up, the Trump administration may have secured a new weapon in its fight against Huawei. How European customers are helping the U.S. turn the screws on the Chinese tech giant. Next. And we are live streaming on Twitter. You can check us out at Technology. Be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. companies brace for increasing regulation in the United States. Our own Scarlett Fu spoke exclusively with INFOSYS co-founder and chairman Nandan Nilekani about whether he thinks bigger is still better in the current landscape. Take a listen.
By and large, I'm very, very bullish on Indo-US trade. I think there's a lot of things we do in the US, which is good for the US. There's a lot of, India is a big market for US companies, whether it's planes or software. So I think there's a lot of two-way trade possible. So I'm overall very optimistic about the future of Indo-US trade.
Okay, although it might be a bit rocky getting there.
No, there may be a few perturbations here and there, but I think fundamentally it's on a good wicket.
If I recall correctly, INFOSYS relies on the U.S. for about 60% of its revenue. Does something like this, worsening trade ties, impact you directly in any way?
Not really, because I think we have moved very well. Today, we are hiring 10,000 people in the U.S. We are setting up 6 innovation hubs across the country. We're getting a terrific response from local government, governors, and even from the federal administration. So I think the fact that we are working on creating jobs here, hiring young people, giving them jobs, training them, that's working very well. And I think we're getting a great reputation for job creation in the U.S.
Do you feel like you have an open line to the government when it comes to making sure that visas are still a two-way street and it's possible to bring talent over?
Well, I think that's an ongoing conversation. But overall, I think the fact that we are doing so many things here is working in our favor.
Now, I want to get your thoughts as well on the U.S. Increasing regulatory oversight on big technology companies. We've been hearing about how Facebook, Google, Apple, perhaps even Amazon are all caught up in this. And we've already seen Europe tighten its grip on this industry. Will this reshape the landscape for big tech companies, not just U.S. companies, but overall?
Well, I think it's very early days yet, and I think we don't know where exactly this is going to go. But it is true that there seems to be more interest in these issues. But I think it's very early to comment on where it will go.
Is being big a good thing or a bad thing in this day and age?
No, I think being big is important, and I think being big gets scale benefits. We have platforms that have billions of users. So I think it's important to have scale, but at the same time, people may be interested in some of these issues.
All right, let's talk a little bit about Prime Minister Narendra Modi's victory. Last month saw a landslide victory for the Prime Minister. How do you see Modi using his strong mandate?
Well, I think I do hope that it will be used for economic reforms. India is well placed, but it has to do a number of economic reforms, like simplifying labor laws, getting the banking sector back on track, creating jobs. So a lot of big things to be dealt with. And I'm hopeful that with this majority and a clear mandate, they will do that.
What kind of timeline do they have to work with on that?
Oh, I think reforms have to be done very quickly. All governments have to do reform in the first few weeks and months of their tenure.
That was Nandan Nilekani there, INFOSYS chair and co-founder with Scarlett Fu. Well, it's been less than 3 weeks since the U.S. cut Huawei's access to Google's Android operating system, and already the smartphone maker is feeling the impact in Europe. British buyers have been trading in Huawei phones, and UK phone carriers have cut Huawei's flagship handset out of their new launches. Meantime, at a press conference with outgoing British Prime Minister Theresa May on Tuesday, President Trump said the U.S. and the UK will find common ground on Huawei. Take a listen.
We're going to have absolutely an agreement on Huawei and everything else. We have an incredible intelligence relationship, and we will be able to work out any differences.
Joining us from Washington to discuss, our own Sarah McGregor, who of course covers trade. So Sarah, will there be an agreement on Huawei between the U.S. and the UK?
So I guess now we have to take Trump at his word that he's working towards that. But it will suit the U.S. interests if Europe or other countries are looking a little bit less favorably on Huawei, if their sales are dropping there. Of course, the U.S. has been sort of jumping up and down, trying to get attention from the Europeans to say, listen, Huawei's a security threat. You know, a key way to cut them off is to look at the U.S. market, but it's also to look abroad in places like Europe and the Middle East and Africa, where Huawei's sales are actually much more significant, and it's been making some inroads. So again, it might be good news, at least for the Trump administration, if the sales are dipping there and people are looking a little bit, starting to question their purchases of Huawei's equipment and cell phones.
Now, if U.S. actions on Huawei, there's the blacklisting, there's the trying to convince other governments around the world not to use their equipment. If we see Huawei really take a hit from some of these actions around the world, will that fire up the Chinese even more to retaliate against the United States?
Well, of course, I guess the risk that we're looking at now, of course, is the U.S. blacklisting American suppliers to Huawei. Americans give some of the key components into some of their cell phones and equipment. And so, of course, once there's a 90-day grace period that ends in August, that could really affect perhaps the operating systems that Huawei works on and some of the other, it might not get the same parts that it uses. It's probably scrambling right now to sort of diversify its supply chain. And so I think for Huawei, they're trying to develop their own operating system, and I think the Chinese government would probably argue that it's full steam ahead, for companies like this. This is its crown jewel. This is its biggest telecommunications gear company, and it's sort of the future. It's the future that China wants to have, leading in innovation.
Meantime, President Trump is also trying to convince the UK to get on side about a possible trade deal. If they come to terms on a trade agreement, how would that affect the global dynamics and what is happening between the U.S. and China right now?
So the first step, of course, in a trade agreement, which the U.S. and the U.K. have been working towards they've created some working groups and got some groundwork done, is, of course, for the U.K. to actually leave the EU so that it has that autonomy and it's able to sort of, I guess, ratify and hammer out its own trade deals. So that's a big first step. And I think after that, there's a lot of things up for grabs. Trump brought in the possibility today that the national health system of Britain needs to be brought into the negotiating table, that needs to be one of the issues they discuss. And of course, that's the UK saying that that's completely off the table for them. So, it's great to say you want to negotiate a trade agreement, but what are the parameters of that? What are you actually negotiating? Are you going to cover services or trade? There's a lot of things they need to figure out first.
All right, Sarah McGregor for us on trade in Washington. Thanks so much, Sarah, for that update. Coming up, the U.S. government sets the stage for formal inquiries and escalated pressure on big tech amid increasing criticism that their practices are harming competition. Who's got the upper hand in this fight? We'll discuss. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in Los Angeles. Back to our top story, the U.S. government's potential probes into antitrust behavior by the likes of Google, Facebook, Amazon, and Apple. We've also got the House Judiciary Committee getting in on the action with hearings and an investigation. So what's the difference between the agency's actions and Congress? Bill Baer, a former Assistant Attorney General in charge of the Antitrust Division of the U.S. Justice Department, explained that earlier on Bloomberg.
That process will play out publicly and is unlikely to have a major impact on what the Federal Trade Commission and DOJ will be doing if they decide to investigate. Those tend to be highly confidential, non-public, on the merits, and divorced as much as possible from whatever political debate may be going on the presidential stage or up on the...
To discuss in Washington, we've got Charlotte Slayman, the Policy Council for Public Knowledge, a Washington nonprofit focused on shaping public policy for an open internet. Prior to that, she worked in the Anti-Competitive Practices Division of the FTC. Also in Washington, Bloomberg Intelligence Senior Analyst for Antitrust Litigation, Jennifer Rhee. So, Charlotte, I'll start with you. We're all wondering what this division of oversight actually signals about the intentions of these agencies. Does this mean they will investigate? Does this mean an investigation is imminent? Or is this simply procedural?
So it is simply procedural, but I do think it also indicates that an investigation is likely. This is the type of process that they don't often go through if they're not going to open an investigation soon. But it could happen that they end up not opening an investigation here.
So, Jennifer, how are the agencies different, and is the objective ultimately exactly the same?
You know, ultimately, both would be conducting broad investigations. Both, what I mean, both the law enforcement agencies, FTC and DOJ, as well as the House Judiciary Committee. But the difference is the FTC and DOJ are looking at conduct to understand whether any of these companies have engaged in conduct that goes beyond just aggressive competition and actually crosses the antitrust line and has harm to the competitive process and consumers. Congress can look a little bit more broadly, and they can look at not just conduct, but also how our economy has changed with technology and whether or not the antitrust laws themselves can handle policing these companies, and whether legislation is needed or some sort of a change to the antitrust laws to rein in the power of these big tech companies.
And the DOJ, of course, we know now has oversight of an investigation into Google and Apple, while the FTC takes Facebook and Amazon. You know, Charlotte, I'm curious about the role of Congress here. Is that just for the public to have these hearings and to do this investigation, or could that lead to policy and regulatory changes?
Right. I think that's exactly why the congressional process is going to be crucially important here. So the agency process, as Bill Baer said earlier, is going to be secret, and the public is not going to have a lot of insight into what's going on. But I think there's a good chance here that there are additional problems caused by these companies that are not antitrust violations, but are different types of problems. And we do not have an expert regulator for digital platforms. So having a more public process in Congress could build a record to have some new legislation to address these problems.
Now, Jennifer, are any of these four companies a bigger risk than any of the others, or at bigger risk for being broken up or being regulated?
You know, I think it's really difficult to say because antitrust investigations are very fact-intensive. So really it depends on the facts and what the conduct is that the Federal Trade Commission or Department of Justice finds that they don't like, and what the proper remedy is to fix that problem. Usually those remedies are fairly narrowly tailored. But for instance, if, let's say, there was legislation like the type of legislation that Elizabeth Warren has been talking about, where we rule that a company cannot run a marketplace and also be a participant on the marketplace, well, then a company like Apple would have a bigger risk, or Amazon would have a bigger risk, because they are companies that run a marketplace but also compete on that marketplace.
So, Charlotte, what could the possible penalties be? I mean, I know this will take years to play out, but what are the scenarios here possibly at the end of a 5, 7, 10-year plus road?
Right. That's a great question. At the FTC, we like to say remedies, not penalties. The goal is always to promote competition, and it is often not actually intended to be a penalty. But some remedies, of course, I think divestitures will be on the table. It may even be significant divestitures like a breakup, although that is probably unlikely. That's still seen in the courts as a very severe remedy. Another remedy might be interoperability requirements. I think that's a major way of promoting competition. These markets are characterized by network effects. So the more people who are connected to the network, the more valuable the network is. But if you make that network open up and allow other competitors to interoperate, that can address that network effect power and create more competition.
Of course, we know about the antitrust investigations of Microsoft in the 90s, and of course what happened with U.S. Telecom. You've got the FTC investigating Facebook right now on privacy issues, and Facebook has said they're preparing for a multi-billion-dollar fine, which would be multi-billions dollars more than any other fine the FTC has ever levied. I mean, would you say that the FTC is in really uncharted territory here right now with the power and the scope of these companies today?
No, I don't think it's uncharted territory. There are a lot of new considerations. These are fairly new products, and so there are definitely going to be some new things that they need to figure out. But I think the FTC and DOJ are used to dealing with very big companies, and so they'll be able to handle it.
Meantime, Jennifer, of course, we saw the markets rebound today. That seems to have nothing to do with antitrust issues, but more with Mexico, more with the Fed. But over time, how potentially devastating could it be to the valuations of these companies, given that this could drag on for years?
Well, I think, first of all, that the important word there is time, because I just don't see anything really much happening for a long period of time. These investigations take a long time, and then if they end up going to court, that takes a long time. But, you know, as Charlotte said, one of the options here is structural, a breakup or a divestiture of certain assets. And certainly, if that's what the remedy ultimately is, that is sought by the FTC or DOJ, I think that could have a pretty significant impact on these companies. But the interesting thing is that Charlotte also mentioned interoperability. And if we think back about the Microsoft days, and the Department of Justice tried to get a remedy to break up Microsoft and could not do that in court, but there was forced interoperability there, and many think that that actually did open up the markets for a lot of new innovation and competition. So it may be that at the same time, the regulators look at something like interoperability and think that that could solve some of the problems here, to the extent they find that there is a problem.
All right. Obviously, we'll continue to follow all of this. Bloomberg's Jennifer Rhee and Charlotte Slayman of Public Knowledge, thank you both for weighing in. Coming up, the rise of digital dissidents in China and how they are testing Beijing's Great Firewall. We will discuss next. This is Bloomberg. In Bloomberg Business Week, the regime of China's President Xi Jinping is one of the most restrictive the internet has ever seen. Beijing spends about $180 billion every year on surveillance and censorship tools like its Great Firewall. But these tight controls are being tested by a new group of tech-savvy activists. Bloomberg Business Week editor Jeff Muskis joins us now with the story. So, Jeff, tell us exactly what these activists or dissidents are doing.
Absolutely. Well, some, like the folks at greatfire.org, this loose collective of activists who've been up and running since about 2011, do their best to provide a jumping off point for people who are in China who want to use either through browsing tools or social media, different kinds of sites that they normally don't have access to if they abide by China's rules of the road. But our reporters Shelley Banjo and Lulu Chen for this story also spoke with a lot of folks, including laborers who may be spending their days planting trees and spraying pesticide, who've also become sort of unlikely activists as it gets tougher and tougher to speak up online.
Now, I was living and working in Beijing for the 20th anniversary of the Tiananmen Square massacre, and that was about the same time that Facebook got shut down and Twitter got shut down. And anytime I was at CNN at the time, aired a story about Tiananmen Square or showed video of Tiananmen Square, that would be blacked out in China. How has censorship changed or increased under the regime of Xi Jinping? I mean, it's always been there to a certain extent, but what is fascinating is that it's gotten more restrictive, not less.
Absolutely. He's certainly made good on his annual promises to crack down harder and harder on most of the ways in which people are allowed to express themselves online in China. Interestingly, though, some of the biggest tools at his disposal to do that, including very publicly cracking down on Apple to force them to remove hundreds of VPN or virtual private network apps from their app store, have proven, if not counterproductive, then at least not successful.
Now, there was a sense when I was there, and this is now 10 years ago, that young Chinese students, for example, were much more concerned about getting a job, more concerned about the economy than they were about political freedom. Do you get a feeling that that is changing, or that, there is more of a pushback against Xi Jinping's regime?
I think you're broadly right that there are a lot of people who are still very happy to sort of to put their heads down and not become targets. I think the lesson of the story that Lulu and Shelley have written here is that it can be a very lonely fight, and so the folks who either like the great fire people who are operating from the shadows, or folks like these laborers who are willing and indeed have spent time in jail for complaining online about even things that their local government officials are doing, tend to argue that the case they're making is one to try and slow the censors down, or to get people to think twice about the compromises they're making. But few have any illusions that they're really turning the tide here just yet.
It'll certainly be interesting to see if this trade war has any impact on sentiment, if it leads to some sort of greater economic downturn. Bloomberg Business Week's Jeff Muskas, thank you so much.
Thank you.
You can hear from more of the magazine's editors and reporters every Saturday and Sunday on Business Week on Bloomberg Television. Well, Atlassian co-CEO Mike Cannon-Brookes has criticized Australia for not providing a big enough platform to encourage tech innovation there. But is that changing? Bloomberg's Heidi Stroud-Watt spoke with Cannon-Brookes at the Morgan Stanley Australia Summit. Take a listen.
On the innovation side of things, look, I think Australians are going to innovate. We're innovative people. I think there are certainly things the government could be doing to help. If you look at the last 3 or 4 years on R&D, concessions, for example, that's critical to the startup industry and getting those smaller companies started and going. That certainly hasn't helped. But at the same time, we do have a booming tech industry here, and it's going really well, almost irregardless of what the government does, which is great. So they could certainly help a lot more than they are. But I think we've got a pretty rosy future anyway.
There seems to be a dominant, theme as we speak to people today that a lot of this progress is going to be made regardless of public policy.
Yeah, it's a bit sad if you're in the government, maybe not as useful as you thought you were. I mean, there's certainly things they can do that are regressive. There are certainly things they can do that can hurt industry. If you look on the energy side of things, as an example, the lack of stable energy policy is probably one of the 2 or 3 leading factors of the price of power being so expensive in Australia. The instability makes it very hard for long-term investments to be measured, and hence you require a larger IRR or margin or error rate on doing those larger scale infrastructure projects. So there's a lot of things they could do to help accelerate those transitions, but they're not going to reverse technological progress. That's out of our government's hands.
Can I ask you to put your mentor cap on? What advice would you give to then a young tech entrepreneur, an aspiring innovator in Australia, to try and navigate the existing environment?
Just focus on your customers. Ignore the government, ignore the things that are going on. Try to build a great product, hire some amazing people. We have amazing talent in Australia. A lot of universities turning out world-class engineers. We have a lot of customer problems to solve. It's really good having big businesses, small businesses, rural communities, other industries that we're really strong in. Obviously, energy is a huge sector here, but also, you see a lot of fintech startups, you see a lot of agriculture startups. We have a lot of problems to go solve and a lot of smart people to go solve them. So focus on that stuff and build a great business.
Yeah, I was looking at your Twitter feed earlier and just, encapsulating how far Atlassian has come in 15 years, the pictures of your attendance at the first and most recent Apple Worldwide Developers Conference.
Right.
It's incredible. How does that play into your activism? Does it kind of hinder it? It obviously gives you more of a profile to be able to address the issues that are important to you?
I mean, look, it's a blessing and a curse to have that profile sometimes, for sure, but we try to use it for positive things and advocating for the changes that we think are there to be made, and that's what I think more business leaders in Australia should do. I do think we have a timidity in business leaders often sometimes to speak out on issues and actually say what they think are right solutions. We're not always going to get it right. We're going to make mistakes, but I do think that with that profile comes some of a responsibility to try to explain, to try to understand, and to try to advocate for positions that move our economy forward in all sorts of different ways.
Because there is a view, I think, particularly in Australia, that you make it about the company, not about the leader, the CEO, or the founder. I mean, does Elon's experience kind of play into that? Is that a bit of a cautionary tale as to how you
Oh, look, you've got to run a great company at the same time. You know, you can't separate the two. So, you know, we spend a lot of time focusing on making sure Atlassian is the best business that we can possibly make it, is hiring the best talent that we can find, and is, you know, keeping that talent, growing that talent, nurturing that talent. We have an amazing company culture. You have to put that first in the list, right? That's what's gotten us here. We have so many great customer problems to still go and chase down and solve that, you know, we don't turn up to work uninspired every day at all. We're very, very bullish on what we're doing as a company.
That was Atlassian co-CEO Mike Cannon-Brooks. Still ahead, how one company is bringing AI to organ transplants and pioneering what you could call medical miracles. That's next. This is Bloomberg. Matching organs to donors is a challenging process, and shortages can mean life or death. Today, there are currently over 113,000 Americans waiting on the national transplant list, but finding a donor isn't the only obstacle. Roughly 1/3 of organ transplants are rejected by the recipient's immune system. Molecular diagnostics company CAREDX is improving that process by bringing AI to transplant care. The company has developed a genetic test to match organs with recipients, as well as technology to monitor the immune system post-operation. Joining us to discuss, CAREDX CEO Peter Magg. Peter, thank you so much for joining us. So tell us exactly how AI is helping to improve the matching process here.
Well, there are really two big issues in organ transplantation, as you were mentioning. On the one hand, you need to match an organ to a recipient, and then after transplantation, you need to care for that patient throughout the lifetime of that patient. We're applying very novel sequencing technology for matching the organ with the recipient, and then after that, we're using the same sequencing technology to care for these patients, detecting rejection episodes early, making sure that clinicians have the information to treat patients and to prevent rejections episodes to occurring in the past.
So how does the sequencing technology actually work, and how is it different from a matching process without your technology?
You know, this is next generation sequencing. It's really the future in diagnostics. We're applying this technology to match an organ with the recipient on a very, very granular level. We do that in organ transplantation, in bone marrow transplantation, and in transplantation overall. Now, in the post-transplant area, we can actually detect the DNA of the transplanted organ in the bloodstream of the recipient. That's a very novel technology, and the cell-free DNA technology is revolutionizing how we can care for patients because it detects rejection episodes earlier. Now you add on this an artificial intelligence platform that allows clinicians to have a deeper insight in aggregating all the various data streams, and it allows them to make better decisions and potentially detecting issues so much earlier than they can do today.
So how much are you improving success rates? What are the numbers?
We have a very clear focus as an organization to improve patients' lives by 3 years. Now, we're very early in the ability to impact this, but we are building an amazing platform at CareDx in order to do so. We can focus on immune modulation. We can focus on adherence and compliance, making sure that patients are actually taking their meds and seeing their doctors on a regular interval. And then afterwards, we also can focus on standardization and precision medicine, individualizing the care that the individual patient receives. The perfect care for that individual patient is really what we're all about at CareDx. So we are applying precision medicine tools to the field of transplantation. We have built a tremendous platform to deliver and partner with the transplant ecosystem to make that available to transplant patients.
Your revenue grew 85% year over year. How does this scale? How do you get this technology accessible to more patients, more recipients?
You know, this is really an amazing growth story. We have built this tremendous platform in transplant medicine. Over the last 18 months, we have already achieved 5% patient penetration in kidney transplant patients in the US. We see this as a $2 billion market opportunity. When we talked about this $2 billion market opportunity 4 or 5 years ago, people were wondering, why is that? The reason is that these transplant patients really live for 10 to 15 years, and there's a recurring revenue opportunity for us on testing these patients throughout the lifetime of the patient. So CAREDX has a model that follows these patients over a very long period of time, which financially is very attractive. But much more important, we are changing patients' lives by making sure that we are detecting rejection episodes early. So scientifically very interesting. Yeah.
How do you expand this technology? Is there any intention or any ability to expand this beyond organ transplants?
No, absolutely. You have, on the one hand, transplantation is a unique opportunity in the context of being at the pinnacle of medical science. You called it the miracle of medicine, and it truly is. But if you think about it, really innovation happens at the top of the innovation curve. So if you have innovation at the top of the pyramid, this will allow us to learn a lot for other areas. We are doing now in transplantation about the top 200 medical centers in the United States are doing transplantation. Now, once we have built an ecosystem that allows us to have artificial intelligence and augmented intelligence relationships with these centers, integrate into electronic medical records, we can roll that platform out into many other areas.
All right, fascinating stuff. CAREDX CEO Peter Magg, thanks so much for sharing what you're doing with us. That does it for this edition of Bloomberg Technology from LA. Remember, we are live streaming on Twitter. You can check us out there at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.